amp2tv.square.
Content, information, and opinions expressed during the related show are those of the show personalities and guest alone, and not those of Vic Canellis Media Group, its parent, affiliates, or stations. VCMG Live is not responsible for any content, information, or opinions expressed. User bears full responsibility for their reliance on such content, information, or opinions.
Making money with Laura Sanders, a name you can trust. With over 20 years of real estate experience and selling over 150 homes a year, Laura Sanders is the #1 RE/MAX agent in the state of Florida for 2021. Join us each week as we discuss how to make money through buying and flipping homes, to renting versus selling, and everything in between. To join the conversation, call in live. 888-994-4995, Studio A.
Hi, welcome to Making Money with Laura Sanders, and I am your host, Laura Sanders. Every week we talk about something that I feel can help you to improve how you make money, how you run your business, whether it be in real estate or any other kind of business. This week, what we're going to talk about is the difference between Freddie and Fannie when it comes to mortgages. I've been a realtor for over 22 years. I've been doing real estate for about 27, and I still get a little confused on what the difference is between the two. So let's talk about that with one of our sponsors, Max Fisch from Nationwide Mortgage. Welcome, Max.
Thank you so much for having me. It's always a pleasure.
It's always nice to talk to you, and always good to learn something new.
Yeah, absolutely.
And hopefully you're I just want to mention that
Sure.
I was looking at some of the comments the last time, and gosh, these mortgage guys just love to check out what you got to say.
I know. Well, I guess
that's good. They're listening.
Yeah, the more out front you are,
Yeah.
I guess the more people that are listening.
Yeah.
You know? So, obviously there's always a million different perspectives, and I just am here giving mine.
Right.
You know, so.
Doesn't mean everybody's right or wrong, and
Sure,
they can comment, but I think that sometimes people really don't know.
Yeah.
So.
Yeah. As far as Fannie Mae and Freddie Mac, that's one of the biggest question marks in general for people that aren't in the industry. Even for some people that are, I'm sure that, there's some confusion there.
Yeah, when you guys talk, well, the Freddie and the Fannie, and it's
Sure.
So let's talk about what is Fannie.
Yeah, so Fannie Mae, well, to group them together, they're under the conventional loan umbrella. So Fannie and Freddie Mac are both under the conventional loan umbrella. And what they are, both are federally backed institutions that purchase conventional loans from banks.
So this has nothing to do with FHA or VA?
Correct.
So you would never
Completely
hear the
separate.
words Freddie or Fannie when you're talking about a VA loan or an FHA loan?
Correct.
Okay.
Freddie and Fannie are specifically for conventional loans.
Okay.
And what they are is they're institutions that were created to, in essence, help liquidity in the market. So one of the problems in '08 was that banks were lending out money, but then there was a halt on purchasing those mortgages. So to back up a little bit, a lot of clients say, you can't, I don't want my loan sold, for example. And when their loan is sold, they're like, well, I'm not sure, what are my terms going to be? Who's going to hold my mortgage? Well, 90% of loans are sold, because if not, then banks would run out of money to lend, right? So when a bank lends out their money, they want to get that loan off of their books. So that's where Fannie and Freddie come in.
Okay.
So a bank's job is to underwrite a file, right? Make sure that the loan that they're writing is underneath Fannie and Freddie guidelines, which we'll talk about.
Okay.
And then when they close the loan, Fannie or Freddie, depending on which guidelines and which route they went, will purchase that loan from the bank, package it up into a mortgage-backed security, and sell it on the secondary market.
Okay.
As a form of securities for investors.
Oh, okay.
And so that's the goal of Fannie and Freddie, is to make sure that there's liquidity in the market. They're constantly buying mortgages so that banks can have more money to continue to lend.
So why is Fannie different than Freddie?
They're simply, one of the basic differences is that Fannie is known for purchasing mortgages from bigger commercial banks, whereas Freddie is known for purchasing them from smaller banks.
Like?
A bigger commercial bank would be Bank of America, Wells Fargo, Chase, whereas a smaller bank might be considered like a guaranteed rate or smaller correspondent lender, right? And so those types of, that is like the basic difference.
And what do you look to be like
as far as?
for Freddie and Fannie?
Well, for me, I'm a broker. So I'm writing the loans through different wholesale banks.
Okay. And then they're selling
them.
Okay.
So I'm not selling loans.
So you couldn't make a mistake and accidentally close a loan that wouldn't meet Freddie or Fannie's guidelines?
No, not necessarily, because it's the licensed underwriter's job to make sure that any loans we're writing are within those guidelines. That's why
So what happens if that happens?
if there's a mistake that's made, then Fannie or Freddie might not purchase that loan.
And then what happens? Your company stuck with it?
It's stuck, no, not with my company, but whatever the bank is that I wrote that loan through.
Okay.
And so, but banks, that's why, you see underwriters being so annoying to clients, making sure that, documentation is in, that things are met. Why do I need to provide that? Well, it's because they're concerned about selling that loan.
So let me get this, let me rehash for a minute. So Freddie and Fannie came into play back in 2008?
They came back, yeah, well.
What was before 2008? Anything similar?
No, well, mortgages have always been bought and sold, right?
Okay, yes.
But the guidelines became more stringent.
Okay.
Right? Because they want to make sure that banks aren't holding loans on their books. Have you ever heard of a portfolio loan?
Yes.
Portfolio just simply means the bank's not going to sell it.
They're going to keep it.
So they don't need to abide by Fannie Mae and Freddie Mac guidelines.
Right.
Because
Which
they're
is
gonna
an
keep
option, people, just so you know. So realtors, when you have a deal that can't close with Freddie or Fannie, then they would go ahead and use a portfolio lender who
Correct.
would then charge probably a little bit higher of an interest rate because they are going to keep it and they need to make sure that they're making money.
Yep. Like Century Village is a big one.
Yes.
in the
So
area.
that is one bank that writes over there.
Yeah,
And
for
then
portfolio.
somebody like you and some guys, like some of the other direct lenders
Yeah.
or mortgage guy, because we have all the different direct lenders, the
Yeah, yeah.
mortgage
Yeah, we
brokers
talked about
and
it last
everything.
time,
Cannot write even a portfolio loan for them.
No,
Because
no.
they have the rec lease.
Correct.
Which is a whole nother show.
Yeah,
Talking
we can
about
talk
rec leases.
Yeah, we can talk about that for a long time. But as far as Fannie Mae and Freddie Mac are concerned, the guidelines for each are different, and it's our job as brokers and loan originators, loan officers, to understand the difference and where a client might best fit. So I'll give you an example. A client comes to me and says, I've been self-employed for 6 years. Okay? Well, I know from doing loans and studying the guidelines that Freddie Mac specifically, if you've been self-employed for 5 years or more, automatic, you can use 1 year of self-employed tax returns.
Okay.
They'll allow you to do that. You don't need 2. So what if 2 years ago they had a really bad year in 2021, but 2022 is much better? Well, I'm going to place them with Freddie Mac because I only have to go 1 year back,
Okay.
right? Whereas Fannie Mae, you have to run it through desktop underwriter. You might have to provide 2 years.
But what's the difference? Like, why would you care which one you go through?
Because desktop underwriter or Fannie Mae
Better rates?
No, they might make me use 2 years of tax returns, where that down year that they had 2 years ago is going to be a factor.
But
in
what
their
I'm saying
income.
is why even go to Fannie versus Freddie?
I wouldn't in that circumstance. I would go
Right.
to Freddie because they would let me use the 1 year of tax returns. I wouldn't even look at Fannie.
But is there a reason? I get what you're saying,
Yeah.
but I'm trying to understand and trying to help our audience understand.
Sure.
Like, is there a reason why do we have two different options? Just because the guidelines are different, or
Yeah, there's different guidelines, and they're just two separate institutions that were created at two separate times
Okay.
to purchase conventional loans. So as far as rates concerned, with us, maybe with some banks there's a difference in rate between the two investors. With us, it doesn't matter. The rate's the same.
Okay.
So for the client, it doesn't really make a difference whether they're with Fannie Mae or Freddie Mac. I think that may be what
Okay.
you're asking.
Okay.
There's no benefit to going to one or the other,
Okay.
other than for on our end qualification purpose. Meaning, like, if we need to only use 1 year and Fannie Mae makes us use 2 and Freddie Mac makes us use 1,
Right.
then we're going to go with Freddie Mac. But that makes no difference to the client as far as rates concerned or anything like that.
Okay.
Yeah. I hope that answers your question.
It does,
Yeah.
and hopefully it answers everybody else's question. Like I said, this gets very confusing.
I know, it's a lot.
And to understand, like, when somebody's mentioning, well, Fannie won't do it, so we have to go to Freddie.
Yeah.
And then I guess sometimes going through Fannie, being with somebody a little more experienced,
Yeah.
in this would make more sense to know to go straight to Freddie?
I think it just really depends on, like, for example, when a client comes to me with a situation, all they're concerned about is getting a conventional loan.
Okay.
Right? So it's kind of my job to determine whether they need to go Freddie Mac or Fannie Mae.
Okay.
Like, there's not really any downside to the client of going either or.
Right.
And so,
Anybody can either one of Freddie or Fannie close quicker?
no. Again, it's exactly
Right.
the same process, same rate. Doesn't make a difference. It's all conventional loan. It's just the guidelines. So anything that's being done with Fannie Mae or Freddie Mac is being done after closing, meaning we're just, hey, we want to choose Fannie Mae because they have this guideline that's best for our client, and it closes the same way that any normal conventional loan would close. And then the lender has to note, hey, this was written under Fannie Mae guidelines, so we need to sell this to Fannie Mae
Okay.
and not Freddie Mac.
Okay, I get what you're saying.
Yeah, but it's not two separate avenues for this one has quicker closings or this one has different rates. It's all conventional. It's all the same process.
And why is it that some lenders, and I don't know if you can do this, so
Sure.
this is good things to learn about how you do your business. Like recently, like I just had a lender close a file in a week. Can you do that
Yeah, absolutely. I do it all the time.
for a condo?
Yeah, I mean, especially if we have the condo, I'm assuming that the
Questionnaire.
lender had the condo questionnaire on file. So
I don't know if they did, but
anytime
I think they
we
rushed it.
Yeah, anytime we do a condo, we have a bank of probably, and by bank, as I'm using that as a.
I get what you're
as a
saying.
very- yeah.
It's probably a bad word.
Yeah, it's probably
we
a bad
have
word.
like a,
we have
a
like
list
a list. We have a list
condo
of
questionnaires for like 2023 or
any
2020.
condos that we've ever done approved. They're already in there. So the first thing I do when I get a contract for a condo is I look to see if that's on that list. And if it is, then it's already approved. We don't have to do anything. Saves the client $400 for a questionnaire.
Right.
And we push it through. But I think your question was why can some lenders close quick and why can't?
I mean, some they're like, oh no, I need 30 days for a loan approval. Like, I'm like, what is going on?
Yeah.
It sounds like to me like these are people that maybe just don't know their job. That they're, there's a lot of people that are.
Sure.
We didn't even talk about loan officers that aren't licensed, like people that are just.
Yeah.
Getting the deals, but they don't understand like the different products out there, and then they're just giving it to an underwriter, and they're like calling for an update, like, hey, where are we at with this file? And it's like they have no idea what they're even talking about.
Well, I think that some of it is it's an intangible, like outside of the realm of what your process is as a mortgage broker or loan originator or loan officer. It's more of just how long does it take you personally to do things?
Right.
Do you know what I mean? Meaning, obviously everybody's different. People function differently, but you could even see it in people's everyday life. Like some people do things quick, some people take days, weeks to do something that they're asked to do, and so that leaks over into the industry. So a lot of the successful mortgage brokers and people that I've met, some of my colleagues, I guess you could call them, the good ones are the ones that typically have that quality about them, that whenever something comes in, you just do it immediately. Right. A lot of the lag in the mortgage industry with deals and contracts just come from human error, meaning they get a contract and they deal with it 48 hours from now or 72 hours from now.
Which is a problem.
Which is a problem.
So let's come back to this. We're going to go ahead and go to commercial break. When we come back, we're going to talk more about how to pick your lender and to know what makes the most sense when picking a lender. So check out our sponsors, Max Fisch and Title Brothers.
Whether you're buying, selling, refinancing, or building your dream home, you have a lot riding on your loan specialist. Max Fisch, a top 1% mortgage loan officer in the nation, will give you a same-day qualifying quote. Max Fisch is committed to providing his customers with mortgage services that exceed their expectations, ensuring that you make the right choice for you and your family is his ultimate goal. Contact Max Fisch today at 954-729-6933 or max.fisch@nwmcorp.net.
At Title Brothers LLC, our mission is to give you, the best closing experience anywhere in the country. Founded in 2020 by Adam Lohman and Josh Wiseman, here at Title Brothers, we're your one-stop shop for residential real estate, title insurance, title and escrow services, real estate closing, and due diligence services. While primarily located in South Florida, we also host dozens of closings throughout the state and even electronically as requested. To contact the Title Brothers, call us at 954-995-4988 or visit our website and get a quick quote today.
You have been watching Making Money with Laura. For more information, contact Laura Sanders at 954-650-0827 or visit her website at theloracell.com. And now back to the show.
Hi, welcome back to Making Money with Laura Sanders, and I am your host, Laura Sanders. Today we're talking about the difference between Freddie and Fannie. This is something that you hear all the time, and you're like, what's the difference between Freddie and Fannie? So that's what we're talking about today with our mortgage specialist, Max Fisch from Nationwide Mortgage. Welcome back, Max.
Thank you. Thank you.
So we're talking about timing and doing mortgages, especially on condos are like a whole nother beast. Like,
Yeah.
I feel like they're definitely a beast.
Yeah. Well, especially since Surfside a few years ago.
And that's changing all the guidelines. And I just have to say that agents that don't do finance deals on condos and you just have cash buyers, you have no idea what is involved in selling a condo with a mortgage. It's totally different than having cash buyers. So a lot of the agents on the east side do have more, but you know, condos in general, especially if you're more than 2 floors, is changing the guidelines, the 40-year inspections, what's entailed with that, what buyers need to know before purchasing these condos, when you should be concerned, when you shouldn't be concerned, right? And I just think that, like, I've heard somebody say, oh, well, you know, listen, selling a $2 million house is actually easier than selling a $200,000 condo.
I would second that.
Yes.
Yeah,
So all you agents out there that do all those $1 million deals, let me tell you something. Our job's harder. So going back to like timing, you want to walk us through timing with a condo and how that looks?
Sure. So whenever we get a contract with that has a condo.
And talk about if and when you can use Freddie and Fannie and when you have to go with a portfolio lender.
Yeah. So Fannie and Freddie are both very, very particular on their guidelines with condos, especially since Surfside happened a few years ago, which was awful. But they want to protect themselves from risk. And condos present a lot of risk just because there's a lot of different factors. Right, the HOA or the condo association pretty much rules, right, with condos, and everybody kind of just has to abide by, you know, how they decide to deal with their finances and so on and so forth. So, Fannie Mae and Freddie Mac are very, very particular on one thing up front. Now they're particular on more, but one thing up front is the budgets of the condo associations.
And that's why. Even FHA was easy to do spot approvals before if the budget was good.
Yes.
Right. And I love it. I love the presidents. No, our budget's good.
I know.
No, they always say, my budget's good. I'm like, it's kind of a little more entailed than that.
Yeah.
But now FHA is saying that if they require a background check,
Correct.
they will not spot approve these complexes.
Correct.
And most places are, but they are requiring that, and they're now considering that to be discrimination.
Yep. I was actually going to say that. I'm glad you know.
Yeah.
I'm glad you know that. But FHA's a whole different ballgame with condos. But as far as
I just thought I'd throw that in there because,
yeah.
like, we're talking about Freddie and Fannie, and then there are some condos that are VA approved.
Yeah.
And I don't think they talk anything about discrimination and with background checks.
Well, FHA coming out with that, just side note, since you brought it up, the FHA coming out with that has pretty much made it impossible to do a spot approval.
Yeah.
I mean, it's possible, but if FHA is going to nitpick about background checks, what condo association isn't going to want to do a background check on who's living there?
Right. And also now a lot of these places are doing online applications. So unless we pay to get online to even look at the application, we have no idea what they're even doing until you pay to get on.
I know. So the budget is huge. And I'll just, if it's okay, I'll just talk a little bit about the budget. So what Fannie Mae...
Because we will run out of time.
Yeah, I know. What Fannie Mae and Freddie Mac are concerned about with the budget is they want to make sure that whatever the allocation is for that year to their income, right, or to their expenses, that they're setting aside 10% or more for reserves.
Right.
So in other words, their savings account, right? And so if their budget is $1 million, they want to make sure that there's at least $100,000 being allocated towards their reserves. Not what their balance of reserves is. They could have like 600,000 in reserves, but they want to make sure that 10% is being allocated that
So which
year.
would say that if minus your cable, minus your water, right? So then you would look at, okay, the decks have to be redone, and that's going to be X dollars, and then the
Correct.
roofs are going to have to be done, and that's X dollars.
Correct.
And so actually we should have had a line item so we could have read from it, because
Yeah.
every condo is different, but they all have different things that they do cover. But we are allowed to back out the costs of the cable, the water, some of those things like
Exactly.
electricity, if they have like a house electricity.
Yeah. So what I see a
to run the
lot,
outside.
what I see a lot is listing agents. They'll say the condo has reserves, don't worry about it. Well, they might have reserves, so you're not wrong, but are they allocating 10% to reserves?
Right.
That's the key. And so whenever you're looking for a condo, you know, I always tell the agents I work with, please send me the budget. And I can tell in 2 minutes whether they have a minute.
And so agents, one of the things today, you could actually, to create a relationship with Max, is send him the budget. He'll be more than happy to review it for you. And then once you see like what he's able to provide to you, you could do business together. And that's his
Exactly.
ultimate goal, right? We all want to do business. Now, if you're not an agent and you just need a good realtor, I'm right here. So,
Yeah, so that's what Fannie Mae and Freddie Mac really
Yeah.
care for up front. And then the 3 major questions.
so when you don't have the 10%, we're going to go to a portfolio lender.
Correct.
Which is going to charge a little bit more money.
Yep.
And then we have to look into whether or not we have rec leases or what's the other word I'm looking for? Not rec leases, but land leases.
Yeah.
So there's a lot of things. Like I just had a building in Hollywood, had great reserves, more than 10%.
Yeah.
Actually, it was like 25. And crazy enough, like you look on Google Map and then it's like the pool's in between this building and that building, and it's a rec lease on it. And I'm like,
Yeah.
are you kidding me?
That's really
So
frustrating.
neither building owned the pool. In the budget is actually a rec lease
Yeah,
for the pool, so that these two buildings can use the pool, but it's owned by a family.
sure.
It's like
Sure.
the craziest stuff. Like, and like if you're a new agent, these are the things you need to learn. This is why
100%.
you know you need to really know who you're hiring.
100%.
Yeah.
And
So-
it's important to note, and sorry to interrupt, but
Yeah.
it's important to note that all of these guidelines are there from Fannie and Freddie Mac to protect the client. I mean, obviously they're protecting themselves, but they're protecting the client from foreclosure.
Yeah.
The reason why they're there is because I was just telling you a break that if there's a rec lease, that means the condo association doesn't have control over what that entity is. Let's just say it's the pool
Right.
or whatever. So if whatever entity has control over that, if they just decide to start charging more, well, maybe there's some unit owners that can pay more, but some might not be able to.
But I feel like
You
though
know?
in that case, when it's something like just like the pool that's in between two buildings, can you give up the pool and be like, fine, then we don't want the pool anymore. We're not gonna be like,
Yeah.
held hostage to this pool. You could have it back.
Yeah, I
and then
mean-
this pool would just sit there.
I mean, the condo association could do that, but obviously that has a trickle-down effect too. Now values go down because there's a green pool. That's true. You know, that's not being taken care of.
Well, we
you
could
know?
talk about this,
So-
and I think we're going to have to come back and we're going to have
Yeah.
to talk about this again. But Max, tell us, what's the best way to get a hold of you if we're thinking about buying a condo?
Yeah, so
or
the best,
anything.
the best way to get a hold of me is you can always call me on my personal line at 954-729-6933 or email me at max, my first name, .fish, my last name, at nwmcorp.net. That's the best way to get a hold of me.
Okay. And if you're looking for a top agent, somebody that has knowledge, guys, know that when you are using an agent to sell your condo, you need to make sure that it's somebody that understands what this can mean, because the worst thing that can ever happen to you is to pack your house, be ready to move, and guess what? They don't get a mortgage. So give me a call at 954-650-0827 and make it a great week. Thanks for watching Making Money with Laura.
Thank you for tuning in for Making Money with Laura Sanders, a name you can trust. To join the conversation, call us at the studio, 888-994-4995 Studio A, or contact Laura directly at 954-650-0827. Laura Sanders, a name you can trust. We look forward to seeing you next week.